welcome to another episode of Financial Earning. Today I want to talk to you a little bit about one of Mullen's 8Ks. They filed this one back on December 22nd. I'm bringing it up now because it has some relevance in terms of when this specific 8K would come into effect. So let's get right into it. First, I want to mention on December 18th, 2023, Mullen Automotive agreed to issue a non-convertible secured promissory note that does not include any stock, warrants, or other securities, and it does not include any conversion rights. Why is that important? That means that this specific promissory note is non-dilutive. It will not impact the market cap. There'll be no type of market cap erosion. There'll be no dilution in terms of increase of outstanding share count based off of this promissory note. So the note itself, it's providing additional capital for the company's manufacturing operations. So that is all we know about it. We don't know why it ends up being such a large amount of money. We just know that it's going to be used in some form or way in the company's manufacturing operations. So the total amount of this promissory note is $50 million, and the total purchase price is $32 million. That means that it's going to cost Mullen $50 million, and they are going to get in return $32 million. There is an original discount of $18 million. This debt agreement will occur on the latter of either January 1st or the first trading day on which the NASDAQ stock market is open for trading. So obviously January 1st we are not open due to the New Year's, but January 2nd would be the effective date, or as we'll find out later on. And also the note will bear an interest rate of 10% per annum, with interest rate increasing to 18% per annum immediately after the occurrence and continuance of an event of default. And it will have a maturity date set as the date that is 3 months from the date of issuance. So if January 2nd ends up being the date of issuance, then the thing will be due in 3 months from that date. Also at the very bottom, you'll notice Exhibit 10.1. This is the actual securities purchase agreement, again, as dated on December 18th. So we're going to go ahead and jump right into that. All right, let's get into the actual contract. So I just broke out some of the information from this promissory note. This is the only page we're going to go over, so don't worry about all these red boxes. We'll get through it pretty quickly. So first thing I want to talk about is the name of purchaser, Asusa Holdings LLC. The name of the authorized signatory is Michael Wachs. Subscription amount, Mullen will be receiving $32 million. They will be paying back $50 million. And then the delivery section 2.2. Wanted to point out that on or prior to the closing date, the company shall deliver, and then look at section 4, the security agreement duly executed by the company. So this promissory note contract is stating that Mullen still has to actually agree and execute this. So we don't know if this has actually been, signed off, and if it's going to be effective yet. But we do know that we will find out on this closing date, which should be happening this coming trading week. All right, and then I want to jump over to section 4.4. The purchaser covets that neither it nor any affiliate acting on its behalf will execute any purchases or sales, including short sales, of any of the company's securities during the period commencing with the execution of this agreement. So in my opinion, this is good news for Mullen, which means that this specific company, Asusa, will not be able to perform any transactions that would affect Mullen's market cap at all. So yeah, I think that's really good news. Going to the section 4.5, a lot of people were a little bit concerned about this. The general release statement so says that in consideration for the payments and benefits under this agreement, each party hereby completely, forever, irrevocably, and unconditionally releases and discharges to the maximum extent permitted by law the other party's past, present, and future parent organizations, subsidiaries, and so forth. So basically, it's kind of a general release where the companies are going to hold each other harmless for anything past, present, future. The next section talks a little bit about a waiver of jury trial. So this specific agreement, these two companies expressly are waiving forever trial by jury. So this would have to come to some form of arbitration or potentially settlement, but not through jury. And then the last section I want to talk about a little bit And I think this is really important. A lot of people are concerned about this company's status when it comes to FINRA. It does say in here that if any provision of this note is invalid, illegal, or unenforceable, the balance of this note shall be remain in effect. So if one of Mullen's attorneys or anyone is reviewing this a little bit further and finds that there is some illegal verbiage or any kind of illegal activities, that that portion is going to be kind of taken out of this altogether. All right, and then this last slide, I thought it might pique your interest. It's some of the older agreements between Isusa and Mullen Automotive. First one I want to talk about is the one on the top left. You can see I have highlighted the 8K filing that this thing came out of. And it is originally an agreement between Drawbridge and Mullen, but Isusa Holdings ends up basically absorbing, taking on this older agreement or this older note that Mullen and Drawbridge had, and this note had a value of $23,831,535.98. And the loan had additional accruing but unpaid interest of $5,035,633.12. So looking at that all together, they basically took on this note for a little bit over $28 million, almost $29 million. And look at the interest rate, 28% interest for this agreement. Of course, the maturity date of this loan was a lot further out, but regardless, the interest rate is much higher than a 10% rate. The second one on the bottom right, you'll see another promissory note between Isusa and Mullen for $12,945,914. And again, you look at the bottom section 2, you can see again 28% interest rate. So although some people may say, man, 10% interest rate is pretty high, we're talking about borrowing a significant sum of money. We're talking in the millions here. 32 million to be exact is what Mullen's going to be getting for this. 10% interest rate, in my opinion, doesn't look too bad, but hey, I'm not a fan. I'm not a finance guy, as I've said before. And then some people have said, oh, well, I don't think Mullen can ever get any kind of really good interest rate or anything like that. I did find in their old 10K, and you can see the hyperlink for that 10K, some of their previous matured notes. So they did have a principal balance of over $3 million, and the interest rate was somewhere between 0 and 10%. Another one they had, which was a real estate note, 5.2 million, and it was anywhere from 5 to 8.99%. So Mullen is very capable of getting some of these lower interest rate notes or loans. So I believe that now that they are in the operational phase where they're getting out deliveries of these trucks and vans, as well as they're starting to generate revenue. So as a lender, having a company now that has revenue on the books should look a lot more advantageous. Only speculation I did want to talk about, and let me disclaim it as speculation, would be in the event that Mullen needed some form of a bridge loan or something of that nature, where they had a very large purchase in mind, or potentially they wanted to set up a contract and they required a specific amount of cash on hand. That could be some of the reasons why they would be taking on a loan of this size with this type of discount. So I guess we'll have to find out. If you guys like this video, if you guys want to see more content like this, please like, subscribe to this channel. Drop some information in the comments on what you did like, what you'd like to see more of moving forward. And with that said, I hope you guys have a great rest of the year.